Hey guys, Brock here with SST. This is lesson 5. Okay, lesson 5, what we're going to quickly go over this website called finviz.com, marketwatch.com, and at the end I'm going to give you guys a little glimpse about symmetrical triangles and how you can use them to your advantage. So what is Finviz? It's a 100% free scanner. It shows the top gainers and top losers for the day. And it also screens 3 primary levels: descriptive, fundamental, and technical. So I'm going to go over Finviz. It's just another one of those free scanners, and this one, I highly recommend this one. It works really good. And in a second here, I'm going to show you how to use some of the primary levels of indicators on there. The next website I want to show you guys is marketwatch.com. And this site, it provides worldwide stock news, and it's actually linked to a few other websites, and you can choose those, which ones you want to go to on the top left. But MarketWatch.com is a 100% free online stock market game. You can use it's the real market, and you use fake money. And what I like about this one is it allows you to trade penny stocks. You'd be surprised how many of these free market trader or fake market traders, they don't allow you to trade penny stocks. And you also get to compete with other players on there. You can allow players to join your game, or you can set a private game in between. You might want you and family, whoever else, or you can just play by yourself and just go against yourself and see how well you do. So I really recommend this game, especially if you're starting off and you don't want to play with real money yet. This is going to give you the same results as you would with real money, so you can really test out your skills. Anybody brand new that hasn't touched the market yet, still not 100% confident, I'd recommend playing this game. I guarantee you it's going to give you a way better perspective than just jumping in there if you haven't been in there yet, and it's going to put you under some of the pressures that traders go under before you're handling real money. So let's get out of here real quick, and I'm going to show you finviz.com first, the 100% free scanner. Okay, finviz.com. We come over here. Let me just go and go to the home page first. Here, as you can see, it's going to give you an overview of the market, the Dow, Nasdaq, and S&P 500. And I really like this about it. It shows you your top gainers and shows you the volume. And as you can see, this stock here is 94% gain. And the reason I like looking at these is because it tells me which stocks people are buying into, stocks that people are looking into. And top losers, I like looking at these because I can usually play a bounce play. When the candlestick hits the bottom, I can usually go ahead and buy in and ride it up a little bit and sell out for a quick scalp trade. So that's just the home page here. Now coming down to the screener, it's going to show you 3 primary screeners that it uses: descriptive, fundamental, and technical. And under the descriptive side, what I really like about this is you just come right over here and you just click price, and I always go under $3 because that's what I specialize in. And then country, I usually click USA, but sometimes I just leave it on any, but we'll just click USA for now. So what I really also like about this is the industry. Some traders like to trade just according to industry. That way they can predict their patterns a little bit easier. They can get used to how they adjust to news coming in, and just dealing with one specific industry can make things easier in the long run because you're going to get used to patterns and how those companies work. You can also filter it through sectors. So healthcare, if you're looking for a lot of pharmaceutical companies, and financial, if you're looking for banks and stuff like that. So coming down here, I'll leave those two on any. Current volume, I always put, usually I like over at least 50,000, but we'll say 100,000 here. So, and that's, you can also click average volume here. Instead of actually current volume, we're going to go ahead and click average volume. So we know people have been interested in it for a little bit now. I'll say at least over 100K. And coming down to the fundamental sides, now I haven't, this falls into a lot of accounting here. These ratios that investors use, and this actually goes really well if you're looking for blue chip stocks, which blue chip stocks are companies that usually fall under the Dow Jones category. And if you guys don't know what exactly Dow Jones is basically, it just takes together the top, I believe, 500 companies, if I'm correct, the top 500 companies in the United States, and just averages their share prices out in accordance to those 500 companies. And then it gives you a price. So, you know, right now it's about 12,400. And so that's what Dow Jones is. NASDAQ is also the same thing, only it refers to smaller companies. S&P 500 refers to like some of the top 500 companies. Now blue chip stock. Now, as I was saying, blue chip stocks usually fall under Dow Jones because those are the biggest companies that they have. And the reason blue chip stocks fall under that is because blue chip stocks are considered low risk, low return. Usually something that you might want to throw into a retirement portfolio if you're looking into mutual funds and stuff like that. So basically, a very good blue chip stock would be, for example, Walmart or Apple. Long-term consistent growth, so, and low risk. And these companies would be great to use current ratio, quick ratio, payout ratio. And you know, these companies have been around for a while, and they can give you a really clear picture on how the company's doing and how they're treating their investors. So we might get into this a little bit later, but like I said, this is basically the intro into accounting. They're going to teach you about some of this stuff here. And maybe I'll throw out a video lesson here down the road, and I'll teach you about some of the primary ratios that I use if I'm looking for like stocks that are ranging usually above $45, $50 and have been around here a long time. So moving on from fundamental, we're going to go to technical here, and this is usually what we've been using. We've been using technical trading, technical analysis through stockcharts.com. So we come in here, you know, here it is RSI, and you can choose overbought or oversold. You can look for a specific candlestick, and you can look for patterns here. 20-day, 50-day moving average if you want the price 30% below moving average of 50. So this all really falls good. Over here, you come over here, it tells you this is actually all of them. So if you want just a bigger perspective on everything that you can do here, this is everything right here. So let's go over to technical here. Let me see if I want anything. Let's just say I want a doji candle. So what I like to do is I like to just go underneath ticker here and just hover over it. And if I like it, then I'll type it into stockcharts.com and take a better look at it. So that's just the basics on finviz.com. Really easy to use, really user friendly. So you guys can come around here, you can mess around with some of their stuff on here. So this is just a quick introduction to that. Now moving on. Next thing was marketwatch.com. So which provides worldwide stock news and free online game. So we'll come here, this is their website, Virtual Stock Exchange Games, and here's just a little bit of what they allow. Trade stocks in real time using your virtual portfolio, talk strategies with others in discussion groups for your game, create a customized public or private game for others to play, or choose a custom list of symbols to trade in your game. So this is great. You can meet other people that are probably also just learning and wanting to learn more, and maybe you can also throw out some of the things that you're learning out in this program to them. So throw a few tips out to them, help them out a little bit. You come down here, you want to first you need to create a little portfolio. It's going to ask you for your user. It's going to ask you for an email, and you have to make sure that your email works. And you have to, because you have to go to your email to activate it. So you can't just type in a false email there. Coming in here, you can find a game, and you can find games to play, and that's great. But you have to play according to their rules, and sometimes and by their rules, I mean that they might set the game up to last only 10 days, or some might set up the game to last for 2 years. So I usually like to just create my own game, and I'll set up how long I want to play and all that stuff. And sometimes other people will come in and compete compete against me, or they're probably just sometimes they can ask me a few questions. Now, the first thing that you have to do when you're creating a game is you have to choose a skill. I suggest that you play Advanced 2. Advanced is it gives you more options, like the ability to make limit orders, stop or loss orders, which I think that is critical information. I mean, normal would be somebody that just like probably for kids, what I consider normal level. Advanced level is a real thing, and we're learning that stuff, so I think it'd be really good to apply it then. So they also have a little learning center here. PDF files of, I guess, some frequently asked questions and stuff like that. So just a quick, I just want to throw that out to you guys. MarketWatch.com. I think it's really good. I think it can help out a lot of people, especially if you're skeptical, at these times. So, okay, now coming to it here. I want to show you guys about symmetrical triangles. So it's one of the most powerful of the 3 triangle patterns. Sometimes they'll fall apart, causing a major downtrend, and you will see higher lows but also lower highs. So it's one of the most powerful out of the 3 triangle patterns. There's 2 other triangle patterns that I'm going to throw out to you guys in my next video lesson. But for right now, I just want you guys to get down symmetrical triangles. So a lot of reading here. I'm just going to skim over it as fast as I can. Okay, so the trend. The established trend should exist. The trend should be at least a few months old, and a symmetrical triangle marks the consolidation period before continuing after a breakout. 4 points. There needs to be at least 4 points of contact. At least 2 points are required to form a symmetrical triangle. Therefore, a minimum of 4 points are required to begin considering a formation as a symmetrical triangle. The second high should be lower than the first, and the upper line should slope down. The second low should be higher than the first, and the lower line should slope up. Ideally, the pattern will form with 6 points, 3 on each side, before a breakout occurs. Now, sometimes it'll have 6, sometimes it could even have 8, or it could be less. It could only have 2 or 3. The more the better. The more the better. So the stronger the breakout. And so ideally they say 6 here, but I'm just letting you know it could be either or. So volume. Now this is a little bit different here. So the volume level should start to diminish, and this refers to the quiet before the storm. And right here, this is all going to make sense to you guys right here in a second. SWNW. This is a great symmetrical pattern here. And right before I continue, though, one thing to remember is, like I said, the pattern can turn upside or downside. So, and I'm going to give you hints here in a second of how to look for that before the breakout occurs. So, coming down here, as you can see, the base of the triangle 5.8, and it's the next time you should probably sell out is when it forms another 5.8. Now, this is sort of a longer term investment. It could be used for a quick term investment, but you're going to gain a lot more over a longer period of time. And what I mean longer for me is weeks, months. I don't really go into years. So coming here, as you can see, you have 3 points of contact here on the bottom, 1, 2, or 3, and they're higher lows. So, and then coming down here, up here, the highs are lower. So it's sort of right here. It's sort of a pinching effect going on, which this is the base of the triangle here, and it's becoming smaller and smaller. And this is where we're looking for the breakout. And as you can also see right here, declining volume, as I mentioned. So the breakout. Now, how are you going to know if it's going to break for the uptrend or downtrend? And this is, of course, the most important thing, is as you can see here, right before it broke out, the next morning it gapped up, and then it had a good amount of buying power behind it. So if you're following your level 2 trading, you should see a lot of buying support coming up behind that. Now moving on, the volume stayed, after the breakout, the volume stayed roughly about the same. But as you can see, it was a lot more buying power. The volume was going towards buying instead of selling. And so this is basically it. Now, when you guys are screening through stocks, you might come across on finviz.com. Finviz.com, I don't think that they allow you to use under, I believe it's technicals, symmetrical triangles, but they have the other two triangle patterns. Oh, at least I know they have one of them. It's called ascending triangular pattern, and I'll be teaching you guys about that in my next video lesson, and along with one other, the descending triangle pattern. So just keep a quick lookout for this when you're screening through some stocks. You might come across one of these patterns, and of course, there's no guarantees, but it's just something to keep your eye out for. As you become a more experienced trader, you're looking for patterns like this. So even if you have to follow it for a few weeks, maybe even a month, even, it'll be well worth the wait. I guarantee you. So that's it. This is video lesson 5 here. If you guys have any questions, you know what to do. Just text me, email me, call me, whatever you guys need. So, okay, trade well.